The Home Mortgage Law Show is a paid program and is intended as a resource guide for education, information, and entertainment purposes and is not intended to provide specific legal advice. The information that you hear should not be used as a substitute for competent legal advice from a professional attorney. Hiring of an attorney is an important decision which should not be based on advertising or the information that you hear today.
You're listening to the Home Mortgage Law Show, brought to you by the law firm of Morris duPont and Regal Tax Advisory Group. We have our attorneys in the house. Attorneys Shay duPont, Will Morris, and Michelle Hanash, our bankruptcy attorney. We're taking your calls right now. It's toll free to call the show, 866-610-6397, 866-610-NEWS, or AT&T Wireless customer star 610. And on the phone, we have Patricia.
Hi.
Hey, what can we do for you today?
My name is Patricia. I wanted to say thank you to Michelle for an issue she helped me with, CACH LLC. I don't know if she remembers me or not, but she got a judgment reversed for me.
Reversed?
Reversed?
I like it.
What is she doing over there litigating? She's over there litigating.
So my only question now is, how does that come off my credit report? I've received the signed order from the judge.
Vacating the order.
Right. The judgment. So how does that come off my credit report now?
Well, you no longer have personal liability, obviously, for this debt. And the order or the judgment was vacated. So it's my belief that the fact that there was an order entered should be removed from the credit report. That's one issue, because if you look at the credit report, you have the public records section, which lists lawsuits and
lists judgments.
Judgments.
She could also record the satisfaction or the release of the judgment.
If she needed to,
Right.
She could probably also work with the credit reporting agencies, which is what I've done for several clients, to show proof that
Right.
the judgment had been vacated and should be removed. That's one issue, and that's important to deal with. The other issue is the negative history on the account, and that's unrelated to the public records section. So you also have to address the derogatory information just linked to the account from the creditor collection agency and make sure that it is, one, accurate. You wouldn't want them to report that you still have a balance that you owe money on, that you're have an ongoing delinquency. So that's important. And also work to see what information you could possibly get removed from the report, going through the channels that we do to try and, fix credit reports and get information removed.
Oh, Michelle, that sounds like a lot of work. Is that something that you will do for Patricia?
Yes.
Okay.
Yeah.
All right.
Okay, I will be sending you an email on Monday. Michelle.
Okay, great.
That does seem like kind of a lot.
Yeah, it seems involved.
It takes a lot of time.
It does?
Yeah.
Okay, thank you all.
Well, thanks for the call.
Thanks for
Yeah.
calling.
We have John on the phone. Hi, John.
Yes, this is John. I'm on a board of directors of a very large condo association. I won't identify what town, you'll probably guess. We have a fair number of foreclosures, and the banks hide behind the safe harbor provision, 718, 116, paragraph 1 and 2, where they only have to pay 1% of the value
Right.
of the mortgage or maximum 12 months maintenance. However, when you read further down, there's a paragraph C. It clearly, to me at least, says that if the bank doesn't take its action within 30 days, on the 31st day, the association could file a suit against them for all the delinquency that the homeowner owns. We haven't tested that in court yet. Do you have an opinion on paragraph C?
Not necessarily, but I'd like to take that test case. It sounds interesting. I mean, look, it is true that what we hear talk about all the time is the bank limiting their liability to the 1% of the 12 months, and that's how we normally deal with it. But I've never had any sort of litigation dealing with that additional paragraph. I'd like to look into it.
Right. The other thing we like to do is we like to do the actual, what we call the reverse foreclosures.
Right, right.
We represent homeowners associations where there is
a pending foreclosure action, and the bank is just sitting on it. And we would go in and essentially tell the court, look, we don't have an argument against it. Please give summary final judgment to the bank and let them get a sale date.
So that
That's
you're
a good idea,
basically
because we do have people waiting a year and a half, 2 years. They don't pay, and the bank doesn't foreclose.
Right, right. There's a remedy to the association, and I'd love to talk to you about it. You can actually do something to make that foreclosure case go forward, so you can get your 1%, or you can argue your subparagraph that you like that says that if the bank doesn't do anything, they'll be responsible for the full amount.
Or there's a case out of Miami where the homeowners association at Peninsula was able to actually take possession of the property lien free. So they actually were able to take the property free and clear of the bank lien because the bank did not act quickly enough. They were egregious, and the judge ordered that the case dismissed with prejudice, which essentially gave the homeowners association that property.
We have gotten properties in a number of cases. We've gotten half a dozen properties from the bank following something similar. We're not attorneys, but we've been doing it for 25 years, and after a while, we started having questions of our own. We're not too bad at what we do.
Sounds like you're
Sounds like it.
But the main thing is, I'd like to see if it's ever been tested. The paragraph C basically says 30 days they've got to do the 1% or the 12 months maintenance. Otherwise, we can sue them for everything. Just be curious about that.
Well, John, you know what?
I would like to do that.
We're lucky enough to have a law clerk in our office, and that's exactly what our law clerks do is they look up that research for us, and they find if there's cases that have relied on that particular section of the statute, and then they actually do basically a summary,
a little memo of law,
a memo of law for us. I want to call it right, a memo of law for us. So if you're interested in having a memo of law done up on this particular issue, we are happy to put you in touch with our law clerks. Of course,
let me have the number and the name of the law clerk.
Sure. The phone number is 800-974-2712, and you'd speak to my learned partner, Will Morris, and he'd put you in the right direction.
Well, I know Will Morris's voice, deep voice. You do have a very official sounding voice. All right, well, I'll do that then.
Okay.
I'll tell you what it is then. It's the infamous former Islandia, now townhouses at Jacaranda.
Oh, yeah.
We know that.
I'm the guy who changed the name. I'm the one I didn't do it.
Probably a good idea.
I did the original research. And so I got townhouses at Jacaranda, hopefully to get rid of Islandia, but people still know us as Islandia.
Yeah.
And as you know, we're 47 separate condominiums, 47 buildings, but they're not associations, they're condominiums. So each building pays its own bills.
Oh, I didn't know that. That's unusual in this day and age.
You've got a 6-unit building of the 47, and 2 people don't pay. The other 4 people in that building of 6 have to pay their bills.
Absolutely. That's the downside of it. Yeah.
Well, it sounds like you're doing a bang-up job. Appreciate it.
Okay.
Give us a call give me a call at the office.
I'm going to give you a call. Thank you very much.
You're welcome.
All right, bye.
What's that number?
800-974-2712. 800-974-2712 to call the law firm of Morris DuPont. Remember, if you can hear my voice, there's an office nearby, but I'm going to remind you where they are. They're in St. Petersburg, Tampa, Dadeland, Doral, Aventura, Fort Lauderdale, Boca Raton, West Palm Beach, Plantation. We'd love to meet with you. It's a free consultation. So all you have to do is call the law firm to schedule that consultation. And there are people in the office right now who are happy to speak to you and schedule that consultation for you wherever is convenient. If you're too far away, don't worry. You can give me a call and I will be happy to schedule a telephone conference with you. And we can crunch some numbers and see what we think you qualify for. We specialize in loan modifications, foreclosure defense, short sales, bankruptcy, credit restoration, debt settlement. You name it, we do it.
1-800-974-2712. 1-800-974-2712. Much more the Home Mortgage Law Show right after this.
What if I told you you could reverse your diabetes and stop taking diabetes medication? If you or someone you care about has diabetes or pre-diabetes, there's a special free video you need to watch. You may have heard about this. It's all over the internet. Reverse55.com. People who have followed this plan at Reverse
Listening to the Home Mortgage Law Show, brought to you by Morris DuPont, PA, and Regal Tax Advisory Group. In the house, we have attorneys Shay DuPont, Will Morris, and Michelle Hanash. Our toll-free number to call the show and talk to the experts right now. It's like a free consultation on air. 866-610-NEWS, 866-610-6397, AT&T Wireless Customer Star 610, and our phones are buzzing. Paul, welcome to the show.
Hi, Paul.
Good afternoon.
Hi.
Good afternoon.
What can we do for you today?
I asked a question. I guess it's your screener. do normal banks, regular banks, lending institutions, do they look for mortgages on manufactured homes?
It's not normally a mortgage on a manufactured home. It's another type of loan. I forget what type of loan it is, but I can tell you that if you have a manufactured home, the loan that you normally have on it, they can not foreclose, but they do something else on it that is outside of foreclosure that happens really, really fast. So for anyone out there who's living in a manufactured home, if you default, it's not going to be a foreclosure. It's going to be much faster.
Kind of like a replevin or something.
Yes. Okay. Thank you, Will, my genius partner. It's a replevin.
I'm not interested in because I've been told so many things about manufactured homes and mortgages, and I was told that you cannot go to a bank; they just won't do it if you're attempting to buy a mobile home. But I've seen so many ads in the paper and elsewhere that a manufactured home can be bought for as little as $4,000.
I think it's true. I'll tell you, I was up in Vero Beach like 2 weeks ago, and there was a manufactured home there for $18,000 on a lake. It was so crazy. It was absolutely crazy. And it was a co-op. And I think what happens with manufactured homes is with a manufactured home, you actually do the financing through the manufactured home company.
Probably, right.
Yeah, it's all one package. So your financing is done there, and it's really rather abusive terms normally, unless you can really have a great credit score. So it's a whole different ball of wax than what we talk about here on the Home Mortgage Law Show.
So in other words, it's more like going to an automobile dealer.
Absolutely, kind of like
buying an automobile.
That's
yes,
correct.
More analogous to that than it would be for a home mortgage. But I appreciate the call. Interesting question, just not something that we talk about here on the Home Mortgage Law Show.
One more. Can I hold you on one more?
Sure.
One more. The land that manufactured homes are on, I understand it's usually leased land, and you have to pay a price for that. Is it possible that whether you have a established park, if it will, and you have a manufactured home, is it possible that could be separated from the rest of the park and bought outright?
Typically, no. The park is a co-op. It's a cooperative, and you cannot separate out one of the lots and purchase it individually. The lots are controlled by the co-op, and you are leasing that lot to put your manufactured home on. Typically, the answer is no. And I can't believe I know the answers to these questions. I'm very impressed with myself, considering this is not the area of law I practice.
But the prices are way, there's a range of prices on that goes from, say, $400 a month to as little as $125 a month.
I'll believe you on that. I will trust your expertise in that area because, frankly, we have none. Because, again, I can't reiterate enough that this show is not about manufactured homes. It's actually the Home Mortgage Law Show.
Thanks for your call, Paul. We got to go on. Hi, Jay. Welcome to the show.
Hi, Jay.
Oh, yes. So I wanted to find out if only the note is signed by the husband and not the wife. Does that mean that the mortgage company can only go after the husband's assets?
You are 100% correct in that assumption. That is the truth. Let's be clear. This is a really good question, Jay, to bring up this example that a lot of people have difficulty with. There are typically 3 very important documents associated with your home when you have a mortgage on that home. There is, number 1, the deed, otherwise known as the title. That shows the ownership of the property. It's not like when you finance a car, folks, that you don't get the title to the car until you have finished paying off the loan on it. When you purchase a property, it is immediately titled in your name. So you've got the title to the property, and you can deed the title to anyone that you want to. Then there is the note. You go into a bank and say, I would like to borrow $150,000 to buy a piece of property. That is the note. And the bank says, okay, you want to borrow $150,000. You sign this IOU for $150,000. That's the note. And then the bank says, but you know what? We don't know you that well. So in order for us to lend you that $150,000, we are going to have to get a secured lien on that property. So in case you default on the note, we will have something to go after and sell so that we can recoup some of the money that we loaned to you. That secured lien on property has a special name, and that's called a mortgage. So if your husband went into the bank and said, I want to borrow $150,000, and the bank says, we'll lend it to you, but we need a secured lien on the property, and they ask him, are you married? And he says, yes. The bank will say, all right, we'll lend you the money, and the note will be in your name, but we will need your wife to sign the mortgage because she has to acknowledge that we are taking a lien on something that she has a interest in via her marriage to you.
Absolutely.
So any spouse typically would have to sign the mortgage even if they didn't sign the note. So a lot of women need to be clear on what they did and did not sign because they often assume that they are on the note when actually they aren't. And there's usually a very easy way to understand whether or not you are on the note. Number one, look at the closing documents. Look, they're somewhere in the house. He's got them in his desk drawer somewhere. Pull up the closing documents and see whether or not you signed the note. If you didn't sign the note, you're not liable for that note. Secondly, pull up your credit score, your credit report. Your credit report, you should be pulling it up once a year anyway. So pull up your credit report. Is that note showing up on your credit report? If it's not, you probably didn't sign that note because that lender would have the right to be reporting the payments that you did or did not make on your credit report. So these are all things that all women out there should be doing if they are in a property that there is a mortgage on. Are you on the note or are you not? Very important question to know regarding liability. And it also gives you the option of if you have to default on that note, and that house goes into foreclosure, lo and behold, the spouse that isn't on the note can immediately go out and apply for a new mortgage and get another property.
Oh. Okay.
Yeah.
Well, that's interesting.
That was a mouthful, huh?
That was pretty good. I'm thoroughly impressed by that explanation.
I have another question, and that is with liens on the property. If the mortgage company files to, say it's a city lien, and they, Wells Fargo, through its underlying attorneys, hereby files a reply to the affirmative defenses of the city and states the following: the plaintiff denies each and every affirmative defense and the facts contained in each defense. Each affirmative defense fails to state the legal defense.
Okay, that's a pleading that was filed by the bank in response to one of the lien holders. The city, it sounds as though the city has a lien on the property. We're named as a defendant in the lawsuit. They file an answer, and the bank is responding to their answer.
It's a bunch of legal gobbledygook, Jay.
Doesn't affect you.
So what does it mean that Wells Fargo is taking care of the lien from the city? Or?
No, what it means is when Wells Fargo is ultimately assumed they foreclose on the property, all junior liens, including the liens by the city, are wiped out.
But I think the bigger question here is I think you clearly need an attorney to be helping you in this case. So why don't you have one? Because these are important documents that you're getting that are going to affect your rights to the home you live in. And I think you need some help there.
Okay.
Give us a call. Take advantage of a free consultation. Write down this number, Jay. It's 800-974-2712. What area of town are you in?
Palm Beach.
All right. Come on in and see us in the West Palm Beach office, Jay. We'll try and help you out. Explain what all these documents are. Explain what your rights are. Explain the timelines, expenses if you were to retain an attorney, what your different options are to resolve this. It seems you've got a foreclosure action on your property.
Certainly seems that way.
You were earlier talking about the 5-year
The 5-year statute of limitations. And if you hold on after the break, we'll come back and we'll answer any questions you've got about that topic.
You're listening to the Home Mortgage Law Show, 800-974-2712. Toll-free number for a free consultation at the law firm of Morris DuPont, 800-974-2712. More of the Home Mortgage Law Show right after this. You're listening to the Home Mortgage Law Show, brought to you by the law firm of Morris DuPont, 866-610-NEWS, 866-610-6397. AT&T Wireless customer star 610. We have attorney Shay DuPont, Will Morris, and Michelle Hanash, our bankruptcy attorney. And on the phone, we have Jay. The number to call the show is 866-610-NEWS, 866-610-6397. AT&T Wireless customer star 610. Jay?
And we've still got Jay on the phone with us. Jay, you had some questions about what Will had discussed in the first hour of the show, I think, which was that 5-year statute of limitations, which is really, really important as we're coming into mid-2014, because a lot of foreclosure actions were filed in early 2009. So
and then dismissed in 2009.
Right. So what's your question, Jay?
Well, if a foreclosure action was filed and then closed and then refiled, then that changes the length of time of the default?
No. The statute of limitations starts running from the time you got the acceleration letter and you defaulted on the mortgage payments. Now, if a foreclosure lawsuit was filed and then subsequently dismissed, and then a new one filed, it's as if the first one was never filed at all. So you go back to the original default, the original acceleration letter, and you start counting 5 years forward from there.
Okay, so the original, what letter, when I first stopped paying?
Yeah, and did you get a letter saying that they've accelerated the full balance of the mortgage? They're no longer accepting monthly payments. They want the full amount?
Yeah, I'm not sure.
You know what? She sounds like she really,
attorney.
really needs help. Give us a call at the office. Bring all your papers. Let's sit down and take a look at them, because I think there's something going on there, and we've got to know whether or not, when your note was accelerated and when it was refiled and all that good stuff, and see whether or not you have a statute of limitation to defend. Or better yet, you just simply need an attorney to defend you in this lawsuit.
Uh-huh.
Okay. Give us a call. We'll be happy to send someone out there to meet you in the West Palm office and go over your paperwork and tell you what we think and take over the representation for you.
What happened, Jay? What happened? What happened that you defaulted on the mortgage?
My husband was ill.
Okay.
Mm-hmm.
That's a common occurrence. What happens? A spouse gets ill. There's medical bills. There's people that are out of work, and suddenly it's impossible to pay the mortgage. So when did you stop making mortgage payments?
Right after he lost his job and we lost that income, and I don't have the date because everything was so confusing at the time. I just sort of stacked the papers aside. So
it's a lot to take over,
Yeah.
especially if it wasn't something that you used to handle. You used to be making the mortgage payments or weren't directly involved in the finances for the family. And then suddenly a spouse gets ill, loses a job. Sometimes there's depression involved and an inability to deal with some of the finances. And suddenly someone who for years and years never had to deal with the finances suddenly has to take over all of these responsibilities. It can be overwhelming. And, there's a lot of different nomenclature that is used. You're unfamiliar. It can be confusing, intimidating. I want you to understand, and I want everyone out there to understand, that the free consultation with Morris DuPont, we're there to try and help you. We're not there to sell you. What we're trying to do is do for you on a personal basis what we do for all of you during the Home Mortgage Law Show, and that is to provide you with the best information and to explain to you what your options are regarding your property. So whether it's a loan modification, whether it's a foreclosure defense, a short sale, can you qualify for a loan modification even if you're in foreclosure? Well, I will be able to give you my best opinion if we meet. I look at your income, I look at the numbers, I look at the value of the property, what's owed on the mortgage right now. These are the kinds of things that we're going to analyze for you, Jay, and we're going to discuss. And Michelle?
And Will actually has a bankruptcy case dealing, in a sense, with an issue like this, where a bankruptcy could potentially even take care of that mortgage if it's been more than 5 years.
Absolutely.
And so
There's a
bankruptcy-
lot of options.
There you go.
Does it bear anything that I had after I realized he was sick? I tried calling repeatedly to talk to them about the mortgage, and they wouldn't talk to me because the note was in his name, and he was sick and couldn't go to the phone.
Right.
What you have to do in those cases, and they probably explained to you, but it was difficult to understand, was they needed a borrower's authorization, and we fill those out and our client signs them, and that authorizes the lender to be able to speak to you just as if they were speaking to your husband. But you need to, of course, fill that out correctly. You need to get your husband to sign it. You need to send it into the right fax number. You need to get confirmation from the lender that they received it before you are able to speak to the lender when you are not on the note. So, of course, that's something that would need to be done. So the fact that you weren't...
Can that only be done in writing? I mean, on one occasion, I did have my husband was home, and I had put a call in, and he did verbally tell them that they could speak with me.
And telephonic authorizations are normally valid for only 24 hours.
Oh my!
Often when I'm doing a consultation, sometimes, Jay, I'll actually call the lender right in the initial consultation because the person really is unclear. They think they had a loan modification, or they have a loan modification under review, but they're not sure what stage it's in, or there's all kinds of questions that in the consultation they might not be clear of. And I say, well, gee, you're with Chase. Let's just call Chase and we'll ask your lender directly. And what I get at that time is I get a verbal borrower's authorization for the length of the phone call to speak directly with that lender. And I've got my the client, not actually a client, consultation, there in the office with me on speakerphone. So the three of us are talking, and I get a lot of information directly from the lender that, and I get people that walk out of the consultation going, I've learned more in this 1 hour than I have learned in the last 3 years that I've been in foreclosure. I had no idea any of these things, but somehow it's just sometimes asking the right questions, being persistent, and understanding how the whole process works, which is something that we definitely know at Morris DuPont. We've been doing this since the Making Home Affordable program came out. In fact, it is the 5-year anniversary.
Right. 5-year anniversary.
Yeah, 5-year anniversary of the Making Home Affordable program.
And of this show almost, right?
That's right, because we started the show so that to help people understand. Actually, the Home Affordable Modification Program and the Making Home Affordable program came out in March of 2009, and the median monthly savings for homeowners getting HAMP loan modifications is $544. Can you imagine that, folks? If somebody agreed to lower your mortgage payment by $544 a month, wouldn't that be fabulous?
That'd be fabulous, but what if your income had dropped so radically that still is not affordable?
What's affordable for you, Jay, and for everyone in the United States is supposed to be 31% of your gross monthly income. So if you and your husband combined strictly have Social Security income of $2,000 a month, 31% of that, approximately $630, is what the lender will have to modify the terms of your existing mortgage to create an affordable payment for you.
I see. Okay.
So there are options. There are ways to get you out of foreclosure and to get you back into a performing loan. But the longer you wait, the less chance you have of qualifying, because think about it. The principal balance of your mortgage every month is going up because you're missing payments and late payments are accruing.
Right, and our mortgage rate was 6.6.
And HAMP gets it down to 2%. Can you imagine having a 2% mortgage?
Yeah. Yeah.
And
Okay.
let's talk about principal reductions. Since HAMP started, over $13 billion in principal reductions for qualifying homeowners in HAMP modifications. So if you have negative equity on your property, very often a lender is going to forgive some amount of the principal balance of the mortgage in order to create an affordable payment for you. HAMP homeowners have saved over $25.5 billion to date on monthly mortgage payments. So I would say it's a very nice 5th anniversary of the Making Home Affordable program. If you're not currently in a modification under HAMP, what are you waiting for? Call the law firm of Morris DuPont.
If the lender puts insurance on the property because the homeowner hasn't had insurance, does that cover like roof repairs?
Yes, that
Yes, it
covers
does.
roof repairs because it is the structure. When the lender force places insurance, it is on the structure. It is not on the contents. So force placed insurance does cover the roof. Jay, we've got so many things to talk to you about.
Okay, great. Alrighty, well, thank you. I will call you again.
Okay,
All right.
well, we look
Thank you.
forward to meeting with you, actually. You know,
Thank you.
you're welcome.
And the number to call is 1-800-974-2712. 1-800-974-2712. Much more of the Home Mortgage Law Show right after this. And you're listening to the Home Mortgage Law Show. Yes, we are in the home stretch, Will. We are still taking some calls here, toll free, 866-610-NEWS, 866-610-6397. AT&T Wireless customer star 610 attorney Shay DuPont, Will Morris, and Michelle Hanash, our bankruptcy attorney. We're taking your calls. Caesar, or is it Cesar?
Cesar. Caesar?
Hail Caesar.
Thank you for taking my call.
Sure.
I'm calling because I applied for a loan modification, and then it was denied, and because they said I failed to provide all documentation. And the documentation they were asking for was a statement from the condo association. I did call the condo association, their attorneys, and they refused to give me any statements regarding my condo because of the fact that I was in bankruptcy. So I was unable to provide any documentation based on that.
Did you ask your lawyer to contact the homeowners association's lawyer to insist that that letter be issued?
You know, I did, and I did do that, and they refused it to her as well.
Wow, what letter was this?
That's strange.
It was they just wanted a statement of the account of my unit. That was all the bank was asking for.
That does not seem something that the HOA has a right to actually withhold as part of the official records of the homeowners association. You have a right to make written requests, whether you're in bankruptcy or not, and the homeowners association is required to either provide that, or you have the right during regular business hours to go to the HOA's offices where the records are kept and make a photocopy of the ledger balance. It's called a ledger something.
The ledger balance.
It is.
Yeah.
It's a ledger balance. So it's very unfortunate that your loan modification was denied for that reason and that reason alone. How long ago was the denial? December. Oh gosh, it's been too long.
Were you doing the loan modification inside the bankruptcy? What chapter are you in?
I'm in Chapter 13.
Well, it seems to me that you could probably file a motion to compel the homeowners association to provide the information and bring to the attention of the court that they're ruining your loan modification by not providing those documents.
Oh, Michelle, I like
it.
that. I like it.
You're on
It's always
fire.
good when
I
you
like
have
it.
a court order
Yeah.
compelling someone to do it.
You know,
Because
so
if they
quickly-
don't,
so quickly
After
you get it done.
repeated requests for that information, then I think you would have grounds.
So I can make an appointment to come see you to handle just the modification part?
Certainly. You
Sure.
can certainly do that. We'd love to help you with that. Give us, what part of town are you in?
Well, right now I'm in Miami.
Okay, great. Come see me at the Doral office, and I'll meet you with you personally.
Okay, great. I will do that.
All right.
Okay.
Yeah, at 800,
Well, thank you.
give us a call, 800-974-2712. That's the phone number to reach the law firm of Morris DuPont. And we have offices in St. Petersburg, Tampa, Dadeland, Doral, Aventura, Fort Lauderdale, Plantation, Boca Raton, and West Palm Beach. Michelle Hanash has been on the air with us for this segment. We're always happy to have her here. She runs the Bankruptcy and Debt Settlement Credit Restoration Department at the law firm of Morris DuPont. My esteemed partner, Will Morris, runs the Foreclosure Defense Department. And I'm Shay DuPont. I run the Loss Mitigation Department at Morris DuPont. We cover short sales, loan modifications, settling of second mortgages, deeds in lieu, all that kind of stuff where we're doing settlements and having discussions and negotiations directly with the lender. So thanks for calling. We appreciate it.
So just one thing. What department in your firm do I ask for based on my problem?
Just tell them you are looking to do a loan modification and that you talked to Shay on the air, and Shay said to call and to schedule an appointment directly with me.
Okay,
Yeah.
I will do that. Thank you.
I look forward to meeting with you.
Thank you. Bye-bye.
Great. Thanks for listening to the show. We appreciate everyone out there that listens to the Home Mortgage Law Show. You know, it's unfortunate. Again, Florida, number one.
Always.
Number one.
Every time a report comes out.
Yep. Florida tops in U.S. foreclosures. In February, Florida continued its streak as the number one state in the nation for foreclosure activity. Although the good news, there is a good news part of this. Florida's foreclosure activity actually fell 24% year over year. So compared to last year, there's much less foreclosures, but there's still more foreclosures than in every other state. You know what? 1 in 372 residents in the state received either an initial filing, an auction notice, or a lender repossession. 1 in 372.
Which is almost like 3 or 4 times the national average, but that's an amazing number.
That's amazing, absolutely amazing. We're ranked third in terms of the average time it takes to move a foreclosure through the system. It's over 1,000 days on average. So why is that an average? Because if you do not have a foreclosure defense attorney defending your foreclosure action, well, once you're served with a foreclosure, blink.
Right.
And your house
It's
might
gone.
be gone. But if you have a foreclosure defense attorney representing you, you could potentially stay in that property and defend that foreclosure action for a minimum, that's right, I said minimum, of 18 months.
Right. And did we not have a Rocky segment just a few weeks ago where a guy came to us and he was already in foreclosure and he stayed there for a while, his circumstances changed, and all of a sudden he could qualify for a loan modification. Not only any loan modification, he got a really, really good one with a principal reduction. Did we have a Rocky segment like that a few weeks ago?
That was actually about 5 weeks ago.
Yeah.
That was Michael, and he was in foreclosure for over 3.5 years.
Yeah, imagine that.
Yep.
If he had walked away, he would have never been able to save that house.
That's right.
Yeah.
And finally, we were able to qualify him for a loan modification because previously he didn't have sufficient income. He finally was able to find a good job, and he was able to settle with Michelle a lot of his credit card debt because that was also holding him back because he had so much credit card debt that even if the lender had modified, he'd still be underwater because of all this credit card debt he was hanging on to. So Michelle was able to settle his credit card debt. He got the job. We were able to stave off on the foreclosure.
Right.
We qualified him for a loan modification, and he got a principal reduction of over $250,000.
Amazing.
It was an amazing result. There was actually tears when that modification came through.
Sometimes what all people really need is the time to let their circumstances change.
Yep.
Like we're talking about these zombie foreclosures, people just walk away and they'll never get an opportunity to see whether or not they could actually save their house.
Yeah. Don't give up. Don't throw in the towel. Don't stick your head in the sand. Instead, call the law firm of Morris DuPont. We're here to help. We want to help. You know us. We've been here with you for 5 years talking about these issues. I still see people that come into me today that said, you know what?
We've been listening all this time.
And I should have called you
before.
a year ago.
Oh, that burns me every time I hear that. It burns me.
Don't wait. We're happy to speak to you. We've got offices near you. If not, it's a telephone call away, and we want to speak to you, and we want to help you with your home mortgage issues, and we want to help you with all your debt issues with Michelle Hanash. Natalie?
Yes, dear?
Are we about to wrap up here?
We have another minute and a half, and I just want to point out how we're so connected on social media.
Please do.
Yes, we have our website, which is amazing. Every week that I just look at it, there's so much information there. It's Morris DuPont, MorrisDupont.com, or you can find it also homemortgagelaw.com. We're on Twitter. It's Morris DuPont, PA. That's simple. You can follow us there. And also on Facebook, where the entire team at Morris DuPont slave away, basically, giving you the to-the-minute information with articles, a plethora of articles every single week. Half the times we don't get to most of them here on the show, but there's a wealth of information there.
And if I have just 30 seconds left, I
Yes.
do want to mention we're looking for a paralegal for Chapter 13. Yes, Michelle just lost her wonderful paralegal. And so instead of going on Craigslist or something, let's put it out there. Michelle, what are you looking for?
Really someone who has Chapter 13
Talk slowly
experience.
so I can type it.
Chapter 13 experience is a must. I really would love to have someone who has experience preparing cases for confirmation, knows what kind of motions we file, know what kind of deadlines we're dealing with, and who really likes helping people and thinks they'd be a great fit.
And where should they call, or who should they contact?
They should call the law firm. Call the law firm at the 800-974-2712. We're going to want to see a resume, and we'll schedule a meeting with you. If the resume looks like something we'd be interested in, you'd be working out of the Doral office, because that's the office that the bankruptcy department is out of over here on the East Coast. Of course, West Coast is different, but this is an East Coast job than the Miami area, Doral. So give us a call.
800-974-2712. 800-974-2712. The Home Mortgage Law Show. We'll see you next Saturday.